Welcome back, everyone. In today's video, we're diving into India's largest beer manufacturer, United Breweries Ltd, the company behind the iconic Kingfisher brand. With the stock currently trading around 1684, UBL has entered a very interesting zone for long-term investors. So let's break down the fundamentals, the risks, the technicals, and the ideal entry-exit strategy in a clean and simple way. Let's get started. As of December 2025, United Breweries is trading close to 1684, which places it near the lower side of its consolidation band. The 52-week range is roughly between the low 1600 levels and around 2090. So the stock is neither at its peak nor at extreme lows. It's sitting in that middle zone where patient long-term investors usually start evaluating fresh entries, especially when the underlying business is strong. UBL remains India's #1 beer company, and even after years of competition, the brand power of Kingfisher continues to dominate the premium beer segment. Now let's quickly look at what the company actually does. United Breweries is primarily into beer production and distribution, with key brands like Kingfisher Premium, Kingfisher Ultra, Kingfisher Strong, and several products under the Heineken India umbrella. What gives UBL its edge is its massive pan-India distribution network, strong relationships with state beverage corporations, and an extremely loyal consumer base built over decades. Beer consumption in India is structurally rising, driven by premiumization, urban lifestyle shifts, and increasing acceptance of mild alcoholic beverages, and all of this places UBL in a very sweet spot for the next few years. Coming to financial and operational performance from FY25 into FY26, revenue has been showing a healthy recovery as demand picks up, especially in the premium beer category. Margins had earlier faced pressure from input costs like barley and packaging materials, but those pressures have eased compared to previous periods, helping profitability stabilize, even though there are still some seasonal and cost headwinds visible in FY26 numbers. Volumes in the premium segment are growing faster than the overall portfolio, and breweries are running at better utilization levels, which supports operating leverage and long-term margin expansion. There are several reasons why investors continue to like UBL. First, brand leadership. Kingfisher is one of India's most recognized consumer brands and enjoys very strong recall in both domestic and international markets. Second, premiumization. Higher margin premium and super premium beers are growing faster than the mass segment, which supports both revenue growth and profitability. Third, the company has an unmatched distribution and brewery network across India, backed by Heineken's global expertise in product innovation, efficiency, and category management, making the business structurally strong with steady demand and high repeat consumption. But no company is risk-free, and that applies here as well. Alcohol remains a highly regulated sector in India, and state-level policies, taxes, and rules can change suddenly, impacting volumes or profitability in specific markets. The business is also seasonal, with stronger sales in summer and relatively weaker numbers during winter and monsoon quarters, which can create temporary dips in quarterly results. Input costs like barley, glass, and packaging can fluctuate, and some states still have restrictions or prohibition, all of which can lead to short-term volatility, even in a fundamentally strong company. From a technical and market behavior perspective, the stock has been consolidating near the lower end of its 52-week range, with recent lows around the mid-1600 levels and highs near 2,300 over the past year. This forms a broad support zone in the lower 1600 to 1700 band, while on the upside, important resistance zones emerge first around the 1,800 to 1,820 region, and then closer to the 1,950 to 2,000 mark, where earlier rallies have faced selling pressure. This price structure suggests stability, with room for upward movement if demand momentum and volumes pick up again. Now let's talk about the entry and exit strategy in a clear way. For the short term, say 3 to 6 months, traders should ideally wait for a clean breakout above 1,820 with strong volumes. Once that breakout is visible, Near-term targets can open up toward the 1,890 to 1,945 zone, with a logical stop-loss placed around 1,640 to protect downside if the breakout fails. Until that breakout confirmation comes, aggressive short-term trading can remain risky because of sector volatility and regulatory news flow. For long-term investors with a 1 to 3 year view, this is where United Breweries becomes more attractive. The ideal accumulation range broadly lies between 1,630 and 1,720, and the current market price around 1,684 is comfortably inside that zone. Long-term upside targets can be visualized first around 2,300. And if premiumization, volume growth, and margin recovery sustain, extended targets in the 2,700 to 3,000 plus range are possible over a multi-year horizon. This is a business with strong brand power, demand visibility, and high repeat consumption, exactly the kind of structure long-term investors typically prefer. To wrap it up, United Breweries is not a high-flying momentum stock at the moment, but it is a high-quality, long-term compounding story. With improving portfolio mix, strong brand leadership, and structural growth in beer consumption, UBL offers a favorable risk-reward profile for long-term portfolios, especially near the lower end of its trading band. Short-term traders should stay patient and wait for a technical breakout, while long-term investors can look at gradual accumulation around current levels. If you enjoyed this breakdown of United Breweries Ltd, do remember to like the video, share it with fellow investors, and subscribe for more deep dive stock analysis and value investing content.